When investing in the stock market, it is better to be a lazy and boring person. I do not recommend you being a hardworking, passionate, and highly motivated investor. Why? Because energetic and ambitious people are far more likely to heavily invest in individual stocks. And index funds are actually best suited for lazy and boring people like me. Before you rush to disagree, let me explain. Most people simply do not have enough time, energy, or professional knowledge to consistently study companies over the long term. So investing in individual stocks is not easy, and the risks can be very high. Even a company that was once extremely successful can suddenly decline because of industry disruption, poor management, failed competition, or policy changes. For example, many people once believed that Nokia would never lose, but the world changes much faster than most people expect. Research shows that most professional fund managers fail to beat the overall market in the long run. The logic of index funds is simple. Never put all your eggs in one basket. Instead, spread your money across hundreds of leading companies in the entire economy. For example, when you buy an S&P 500 index fund, you are essentially investing in 500 large US companies at the same time. If some companies go bankrupt or decline, new stronger companies will replace them. So the index is constantly undergoing a process of survival of the fittest. You do not need to read financial reports every day, study stock charts, or guess which company has the most potential. Instead, you simply participate in the long-term growth of the overall economy. Another important point is that emotionally, most people are not suited to heavily investing in individual stocks. Individual stocks are highly volatile. When prices rise, people become greedy. When prices fall, people panic. Most investors end up buying high during hype and selling low in fear. Index funds also fluctuate, of course, but over the past decades and even over the past century, the overall long-term trend has been upward. For the vast majority of people, the best approach is to be boring and lazy and invest in index funds